Okay, this is part three of the trading course, how to use the Fibonacci tool. And I'm actually going to go to the chart for this one. So there's two different ways to do it. So if you're looking for areas of support, you're going to want to take the fib, go from the swing low, and then to the swing high. And as you can see, the price action comes to this golden pocket is what this is called, the golden pocket. And it has a little bounce off of it, even if it doesn't hold. And this is on the 3 minute time frame. So we're gonna go to a bigger time frame, the hourly. So right here, we can do it again from the low to the high. And so this shows that this area right here that I have a level marked out at is a Fibonacci retracement level. And at the same time, we are getting some bullish divergences forming on the higher time frames. See, it came right there. We got a bullish divergence on the 12 minutes. Okay. And then the other way to use the fib is for targets. So you go from the swing high to the swing low. And these are going to be like the areas where you would be looking for a short. The golden pocket is at another one of my levels up here, at the 24,000 level. And it will have, I mean, as you can see already, it's come up to here once and rejected off of it. And before it came up to the 6 7 or the 786 and rejected off of that one too. But you wouldn't have known that these were uh, fib levels until right now. But if it comes up to this level, this is where a good short position. I mean, yeah, this would be a good place to look for a short. Let's go back to the course if I can click it. There we go. Slideshow. Okay. Take profits, stop losses, and risk management. And this is the most important part of trading. You want to make sure to practice proper risk management. Uh, how to practice proper risk management is always have a stop loss on your trade. A stop loss is a tool or basically an instruction to automatically sell your position when it reaches a designated price point you set. The intent is to stop your loss of value, prevent you from holding a price point and being stuck in a position at a value higher than it's trading. So basically what I'm saying is it's to prevent you from losing money, and you can put more money into a trade without losing as much if you properly use risk management. Uh, take profits quickly. When your trade becomes profitable, sell enough of the position. I mean, honestly, I would recommend for what I do, I only sell like 10% increments and then I just move my stop loss to my entry price so that I can't lose any money and all I have is gains. So yeah, after you secured your gains, move the stop loss to break even. The last point of the crypto, Bitcoin, after you take profit to preserve as much capital as possible. You can always re-enter a trade. So if it comes back down to your stop loss and they're still getting um, continued confluence of what you were thinking, then you can just re-enter the trade. So it's not like you're missing out on an opportunity just because it comes back up and stops you out. You still have the opportunity, but you don't lose more of you don't lose money just in case it does go the other way. Okay. Without risk management, you could potentially lose all of your investment, have your capital tied up waiting for it to become profitable, and ultimately becoming so frustrated you give up. So, this means you have to practice proper risk management, which means only risking 1 to 5% of your trading account, only 1% to 5% max when you are trading. Okay. You use the technical analysis to try to make a positive trade more profitable. You will make several trades. The goal is to win more trades than you lose using stop losses to protect yourself. If you gain 100% of your investment on 10 trades and lose 50% of the time, your investment on another 10 trades, you break even. If you gain 10% on 10 trades and use stop losses to mitigate your loss to 5% on 10 trades, you make just over 71% profit. Risk management and patience wins every time. While the huge gains, doubling your money, feel great, being clobbered by 50% losses negate all of the great work that you did. So do not succumb to your emotions while trading. The mindset and risk management. The stock market is a device to transfer money from the impatient to the patient, Warren Buffett. And it's the same with the crypto market. It's the same thing. The people that are more patient are always the winners. The key to the game is to preserve as much capital as possible. To do this, make sure you take profits and move stop losses to break even. This is so crucial. Even a little win is good, is a good win. And you can always re enter the trade if you continue to get your confirmations. So just wait for another good entry point. Open up multiple accounts or trade multiple assets to make it easier to use your risk management strategy. It is never a good idea to go all in on one position. There are no sure bets in trading. As said before, this is a game of averages. Win more than you lose. Patience is the most underrated skill required in trading. And leverage is a tool just like the fib or the indicators. If you use risk management plan, if you use your risk management plan and use leverage to help you achieve that goal, you're set. That is the that's going to help you tremendously, because if you have, let's say, $100, okay, and you want to put $100 in a trade, what you can do, 5x leverage, put $20 in a trade, and then you can use the rest of that money to open up other trades. So that is why leverage is so important, because you can get a lot of money in a trade, risking very little, and make extremely big gains. Okay. And we're going to cover this in the next video.